Thank you so much for joining us. I'm Marlon Bowling, your tour guide to the ag commodities. It's Thursday. You know what that means. It's weekly export sales day, and USDA did come out with the weekly numbers just a short time ago. So let's take a gander through these, shall we, and see what we had this week. Any surprises? Well, you be the judge. On the corn, we had a total of 604,100 tons that were sold last week. Just to give you an idea what the trade was looking for, they thought it would be between 200 and 550,000. So it actually exceeded expectations by a little bit. I guess a little bit of silver lining there. On the soybeans, we came in at 458,200 tons. And the trade was looking for anything from maybe some cancellations of 100,000 tons up to a total of 500,000 on the positive side. So it was just barely within the range of estimates at the high end. And we had soy meal, 136,900 tons sold last week, right in the middle of the range of estimates that ran anywhere from 75 to 275,000. On the soy oil, it barely registered 600 tons. That's like a pickup load. But anyway, the range of estimates ran from none to 10,000 tons, so I guess it qualifies. In the wheat, 511,100 tons last week, and the range of estimates ran between 300,000 all the way up to 850,000. Let's take a look also at grain sorghum and cotton and rice. Grain sorghum, we did have a positive number this week. Instead of reductions, we had 5,900 tons sold last week. Upland cotton, 167,300 running bales, and we had the rice at 67,100 tons this week. Well, we have Brian Hoops on the line, and he is with Midwest Market Solutions. He's in Springfield, Missouri. And Brian, always good to visit with you. Anything particularly stand out on these weekly export sales numbers that really caught your attention this morning or not?
Hey, good morning, Marlon. Yeah, not so much as far as these export numbers go. You know, they came in pretty much as expected by the trade. One of the bright spots was old crop soybeans. We've had 3 weeks of net cancellations, and we did not see any this morning. So that was a plus that we were able to have some positive old crop soybean sales. The new crop corn, new crop soybeans, the wheat sales, all pretty much uninspiring routine type numbers. So really, I don't think it's going to give us much in the way of any direction in the markets. Technically, we broke down overnight and seemingly bounced just a little bit after those export sale numbers. I think from a technical standpoint, December corn made a low last month, right around 566.5, 570 in that range. Soybeans right around 1304. Those are some key numbers to watch. That would represent a potential double bottom on the charts. And that's seemingly what put the bottom in the wheat market is a double bottom. So let's look and watch and see if we can find that technical support, bounce off of it, and hold it on a closing basis. At least that would subside some of this fund selling that we've seen and allow the market to have some sort of a rally or at least a short covering bounce here, maybe into the end of the month in the August supply and demand report.
Well, the December corn was down 15 3/4 cents this morning at 574 1/4. Let's take a look at the soybean trade then on the Globex market here this morning. Well, we were lower across the board here too, just like in the corn. August was down 16 1/4. November dropped by 19 3/4 cents in that overnight trade. It's just like trying to catch a falling knife here this last couple of weeks in the grain market. On the wheat trade, we'll go to Chicago. September was down 4 3/4 cents overnight at 814 3/4. In Kansas City, similar action. We actually had the September contract down 2.5 cents. It finished at 868 per bushel this morning. Spring wheat in Minneapolis was down 8 cents on September at 916 1/4. And just to get you caught up on the cotton market, pressure there too, with December down 129 points at 91.52 per pound. We'll come back in a moment. We had beef and pork export sales numbers, and we'll talk about that in just a moment. We're talking with Brian Hoops of Midwest Market Solutions. Now, I mentioned before the break that we actually had beef and pork export sales numbers. If you recall, last week, they were very bad. They were really dismal. Let's see if they picked up the pace here this week a little bit. So let's go to the beef number first, and we had 23,800 tons that were sold this week. That was a vast improvement over what we had a week ago. Remember last week, I believe it was under 10,000. It was actually 97% higher than the 4-week average. Now, the key buyer was South Korea for 7,700 tons. Japan picked up 5,800 tons. And then next, China, 3,100 tons of beef last week, followed by Mexico, who picked up 1,900 tons, and the list goes on from there. On the pork side, we had 20,600 tons. That was 13% higher than what we had last week. It was down a little bit from the 4-week average. Now here, the key buyer was Mexico at 10,500 tons last week. Japan picked up 2,600, and China 2,500 tons of U.S. pork last week. Canada did buy 1,600 tons, by the way, as well. So let's review how we finished yesterday in the markets on the live cattle board. Let's go ahead and bring that one up here. We'll see how it headed into the close, and it was mixed. It was basically mixed all day long, I believe. The nearby is a little firmer. August only up 1 tick yesterday, 2.5 cents. And we finished with the feeder cattle market yesterday on the August, 92 cents lower at 177.82. Now, that was a bit of a concern with corn floundering the way it was. And then lean hogs finished the day $2 and a nickel higher at 114.87. So Brian talked to me about this. On the livestock summary, I saw where we had a little bit of cash cattle trade yesterday, but markets seem to be kind of steady to maybe a little bit weak in the knees. What's going on there?
Yeah, you're right, Marlon. Cash trade in Texas about 136, $1 lower than a week ago. Nothing developing in Kansas, but I do suspect we'll start to see some trade in Kansas today. The Northern Plains had dress trade about $3 lower. Live trade was a little bit softer as well. So we're seeing August futures just below 136. That's right in line with where the cash is, and really no reason for August to try and rally at all. The deferred contracts may put a little premium in if the feeder cattle rally, and would expect feeders to find some strength with the lower corn prices. But as we get above, like, say, 185 on a lot of these months, that's a very attractive level for hedgers, and we're seeing a lot of hedging come into the marketplace and cap the rally. So cash trade looks to be a little softer this week. Cutout values are declining. Tomorrow we'll have a cattle on feed and inventory report, and that looks to be friendly, at least for this month. On feed numbers below year ago, placements well below last year, with marketings above. But I think next month we're going to run into big, heavy placements once again as we pull cattle off of these pastures and put them into feedlots.
Does that cattle inventory report have potential to have a big surprise in it? Because that would include pasture cattle as well, right?
Yeah, that could be a surprise to the trade. The estimates are out on the news wires this morning, but yeah, it could give us a surprise. I think we may start to see, bigger numbers showing up because of those pasture cattle coming off the pastures. There's just nothing out there in the plains to graze off of because of the drought.
All right, excellent information, Brian. Thank you for joining us here on a Thursday. Appreciate that very much. Brian Hoops, Midwest Market Solutions. So we're about ready to get off and running at the bottom of the hour here. Janet, I'll turn it back to you.